D-Wave Quantum just shocked Wall Street. Again. The company posted a blowout quarter, announced a world-first quantum computing breakthrough, and sent its stock soaring nearly 25% before the market even opened. But the big question now, is this just the beginning? Welcome back to The Alternative Investor. I'm Robert. And today we're diving into the company that just might be the first to crack quantum supremacy D-Wave. We'll cover their massive earnings beat, what this breakthrough actually means, and whether this is a stock to buy, hold, or trade with options. D-Wave is not your typical quantum computing company. While many in the space focus on gate-model quantum systems, still years from commercialization, D-Wave uses a different approach called quantum annealing. It's purpose-built for solving optimization problems that classical computers struggle with. Think logistics, manufacturing, drug discovery, even simulating magnetic materials. D-Wave systems are already being deployed in the real world, and this quarter proves it's not just theory anymore. Let's talk numbers. D-Wave posted $15 million in revenue, up a jaw-dropping 509% year-over-year. That's not a typo. Revenue quintupled in just 12 months. The growth was driven primarily by the sale of a quantum computing system to the Jülich Supercomputing Center in Germany. More impressively, the company achieved a gross profit of $13.9 million, with gross margins hitting 92.5%. Last year at this time, margins were below 70%. That margin expansion signals massive operational efficiency. Losses also narrowed significantly, from $17.3 million last year to just $5.4 million. For a pre-profit quantum company, this is a major win, especially when paired with a record $304 million in cash on the balance sheet. But the numbers weren't the only reason investors lit this stock on fire. D-Wave made headlines by publishing a peer-reviewed study in Science, claiming quantum supremacy with their latest system, Advantage 2. In that paper, they demonstrated a quantum simulation of magnetic material behavior that would take a classical supercomputer over 1 million years to solve. D-Wave's machine did it in just 20 minutes. Now let's be clear, quantum supremacy is a loaded term. But this isn't marketing fluff. It's peer-reviewed, published, and industry-validated. This milestone sets D-Wave apart from every other public quantum player right now. This quarter also proved D-Wave is no longer a science project. It's a real business with paying customers. Here are two examples from the earnings call. Ford Otosan, a major European automaker, deployed D-Wave's tech to optimize production line scheduling. What used to take 30 minutes is now done in under 5. Japan Tobacco, meanwhile, used D-Wave's system to simulate molecular structures for drug discovery. The results were superior to those generated by classical algorithms. These aren't academic pilots, these are real-world use cases delivering value, today. QBTS surged nearly 25% in pre-market trading after the earnings release, and for good reason. But is it too late to get in? As of now, D-Wave's market cap is still under $1 billion, with $300+ million in cash, accelerating commercial adoption, and the first public claim of quantum supremacy. The upside potential is enormous. That said, it's still a speculative play. Profitability is a ways off, and the quantum space is notoriously volatile. If you're investing, think long-term. If you're trading, the volatility can be a weapon, or a trap. If you're hesitant to chase the price after the 25% move, consider using options to manage your risk. One strategy. Sell a cash-secured put at the $1.75 or $2 strike. If the stock pulls back, you get in at a discount. If not, you keep the premium. Already own shares? Consider selling covered calls at the $2.50 or $3 strike. This lets you generate income while setting a profit-taking level. Either way, options allow you to engage with QBTS without blindly buying into the post-earnings hype. This quarter changed the narrative. D-Wave just proved it can grow revenue, deploy in real-world settings, and push the boundaries of quantum physics, all in the same quarter. With a published supremacy claim, commercial traction, and strong financial momentum, the company just positioned itself as the leader in public quantum computing. Is it still risky? Absolutely. But for investors looking to place a bet on the frontier of technology, this might be your moment. If you found this breakdown helpful, smash that like button and subscribe to The Alternative Investor for more deep dives into disruptive tech, hidden gems, and market-shaking news. Are you buying D-Wave, selling the pop, or watching from the sidelines? Let me know in the comments below. Thank you so much for watching, and I'll see you in the next one.